We're going to backtest on a couple different pairs just to show you guys how to read charts. And what we're going to be doing is just recognizing candlesticks because that is the bulk of how to read charts. Now, I will go over different ways that you can read them because you don't just have to use candlesticks. There are different chart styles that you can go into, but I personally use Japanese candlesticks. That's what they're known as, or JCP for short. And we're going to be focusing mainly on those today because that is my bread and butter. If you guys did not know, I trade price action and I do not use any indicators and I rarely ever use patterns. But I will be showing you guys some candlestick patterns that will help you read price action better. What's up, y'all? We back with another banger. The Trading for Rookie series has been going pretty well. We just went over the trading terminology that you guys learned in the last video. If you haven't already learned, go ahead and click right up there. It's going to take you straight to it and you'll get a lot of the terms that you need to be a rookie in this market. Because look, we're looking to transition from being a beginner to your first rookie season. And after being a rookie, you'll transition into becoming a pro. And then later on in your stages, you'll become a veteran. You probably clicked on this video because you don't know how to read charts and you really want to learn how to read them. But every other video on YouTube is kind of confusing. Let me go ahead and give you a crash course on it. We're going to be using real live charting examples. I'm not going to be showing you any PDF documents or anything like that. We're just going to be right on TradingView. If you guys don't know what TradingView is, it's just your notebook that we as traders, we use to do our own chart work and just basically get better at our chart work and getting better in the market. You can kind of compare it to like a whiteboard when you're brainstorming and you're like writing on there and stuff. That's basically what TradingView is for the market. In this video, I'm going to be showing you 3 different styles that you can use to read the charts. And it's up to you to decide which type and which style you would like to use. It doesn't matter which style that you use. It all depends on you as a person. Whichever fits you perfectly is the one that you want to stick with. I personally have used all 3 in my journey, but I normally do stick to the first method that I will be teaching you in there. If you haven't already, make sure you check out all the other videos in the Trading for Rookie series so you too can transition from being a beginner into a rookie and eventually become a pro. And if you want to stay updated on this series, make sure you like and subscribe. Now let's go ahead and hop on the chart. We're going to be doing something known as backtesting. If you don't know what that is, make sure you check out my terms to know for rookies. It should pop up on the screen right around here. We're going to backtest on a couple different pairs just to show you guys how to read charts. And what we're going to be doing is just recognizing candlesticks because that is the bulk of how to read charts. Now, I will go over different ways that you can read them because you don't just have to use candlesticks. There are different chart styles that you can go into, but I personally use Japanese candlesticks. That's what they're known as, or JCP for short. And we're going to be focusing mainly on those today because that is my bread and butter. If you guys did not know, I trade price action and I do not use any indicators and I rarely ever use patterns. But I will be showing you guys some candlestick patterns that will help you read price action better. I'm going to go ahead and grab 2 examples that are the easiest to spot while you are on the charts. When reading charts, you must read them left to right, the same way you would read a book. And if you watch my first Trading for Rookies video, you'll know that there are 2 different types of ways that you can make money in the market, and that is buying and selling. I use candlestick patterns to let me know whether I'm buying or selling. And let's grab 2 easy ones off the rip. We have a bearish engulfing right here. And we're going to be using real chart examples. Okay? This is a bearish engulfing. Right here we have a bullish candle that was then engulfed by a bearish candle, meaning the buyers were overtaken by the sellers. In this instance, that's a selling candlestick pattern. On the opposite side, we have a bullish engulfing, which is a bearish candle followed by a strong bullish candle that engulfed it. Engulfing means that it's essentially eating it, like it's bigger. It's the easiest way to remember. And those are 2 common examples of buying patterns and a selling pattern. Now I'm going to attempt to grab all of the ones that I do know, and I'm grabbing real chart examples to show you guys that not every candlestick is perfect. It's not going to look like the same candlestick that you may read in the book or that you may have seen on somebody's Instagram post. it's not going to look the exact same. The whole goal is to use your best judgment when analyzing the charts or just reading the charts. We have a bullish hammer over here, and we'll go ahead and center the camera on it. And it's this candlestick here. And a bullish hammer, which is a doji style candlestick, otherwise known as a pin bar, can be either a buying color or a selling color. The color does not matter when it comes to this candlestick. As long as the tail is 2 times as long as the body, that is considered a bullish hammer. There is also something known as a shooting star, which is a bearish candlestick. And when I'm saying bullish and bearish, guys, please, if you haven't already, go and watch the terms to know, because it's going to make this so much easier for you. Like I said, we're going to try to use gold as best as we can. We have an example here, which is a shooting star. The body is here, and the tail is just about 2 times the size of the body. That is a bearish candlestick. And then we have a bullish pin bar, the hammer, that's right here. That is basically the same candlestick, just showing different things. Just like how the bullish engulfing and the bearish engulfing kind of mirror each other, but they're not the same. And I'll make sure, let's go ahead and mark these off so you can see them. We'll make this one red because it's a bearish candlestick, and then we'll make this one blue because it's a bullish candlestick, to illustrate what's going on here. And you can see it's just this candlestick here that's in black, that is a shooting star. This candlestick here that's in blue is a hammer. Now, what will help you guys is if you have a notebook out and every candlestick I go over, you attempt to either draw them, or if you're on your iPad or something, you screenshot them and then you write under them the attributes of them, because you want to classify each one of these candlesticks as either bullish or bearish. Because remember, you don't have to recognize all the patterns. You don't need all of the patterns. You only have to recognize a couple to let you know what's going on in the market. Generally, they're not absolute, because if you see here, this is a shooting star as well. But what happened? It bought through it. But this is just like a general overview on how to read charts using candlesticks. Like I said, we're going to go over different styles as well. This is the piercing candlestick pattern, which is known as a bullish pattern. There must be a bearish candlestick and then a bullish candlestick inside of the body, like so. So it's bearish and then bullish, very small. It's like a reverse engulfing candlestick. We have the same thing here, bearish and then bullish. And of course, there is an opposite one of this as well, and that is known as a dark cloud cover. We have a dark cloud cover right here, and then we also have one right here where it's bullish and then instantly bearish right after, but it doesn't engulf it. It's inside of the body of the other candlestick. Here's an example of another bullish candlestick pattern. We have a morning star, which shows a bearish candlestick, and then a small candlestick. It doesn't matter if it's bullish or bearish as long as it's small, and then a strong bullish candle right after that. That is known as a morning star, and it's this example right here in this circle that I'm circling. And just like all the other candlestick patterns, the morning star has a mirror, which is the evening star. So it's a bullish candle followed by a small candle, doesn't matter if it's bullish or bearish, and then a strong bearish candle right after that. All right, that is all the candlesticks that we will go over today. We've gone over 4 candlestick patterns for bullish and bearish, so that's 8 in total. And of course, there are more. You can look them up on Google if you would like, but like I said, you do not need to know all of the bullish and bearish candlestick patterns to be a successful trader. You don't need that. You just need enough to be able to recognize in the market generally what's happening. That's it. Now, let's go to another style of reading charts. This is known as the line chart. Many of you may be familiar with this. if you ever use any type of stock app, or you just check the stocks, like if you were to type in Google right now, it's going to show the line chart. Or if you are familiar with crypto and you use your crypto exchange platform, you'll normally see a line chart. When reading these charts, you're looking for dips and you're looking for peaks. So it's like a peak and valley mentality. Anywhere you see a peak and a valley, those are your opportunities. So a peak would be considered a bearish pattern. A valley would be considered a bullish pattern. Like if we're comparing them to Japanese candlestick patterns. And that's really all that there is to the line chart. Next, we have Heikin-Ashi, which, as you can see, these candlesticks are very much different. With Heikin-Ashi, what's going on is the stronger the candle, right, the stronger the body looks and the less of a wick, that shows bullish momentum. So there are no candlestick patterns. All that there is just momentum in each one of these candlesticks. And as you can see, they're a lot more rough than the other candlesticks that we did have. So really, you're ultimately looking for strong bullish, which you can clearly see that this is bullish because it's all green, or bearish, which is just the strong red candlesticks. And that's all that you need to know when reading Heikin-Ashi, because Heikin-Ashi is very self-explanatory. There is no signals. It's just like the line chart, except using candles. That was a very quick guide on how to read charts. Like I said, it's not too much that goes into it. We did go over the candlesticks. We did go over Heikin-Ashi, and we also went over the line chart. If you guys want to stay updated on this series, make sure you like, comment, and subscribe. I will be posting more to this series. Like I said, this is my gift to you guys for supporting the channel. And if you guys haven't checked out the other videos, make sure you just go ahead and check those out. They will be linked at the end of this video, just so you can get an entire crash course on becoming a rookie in the trading business. Because if you did not already know, trading is a business. You must trade like a businessman or woman. And I will catch you guys on the next video. Your boy Godmade Dan, out.